Welcome everyone to Vested Interest. Hey, this is Shane. Wanted to drop back in and put out another video on the stocks I purchased this week, this past week, the first week of February. The market's been pretty volatile lately. A lot of stocks dropping by significant amounts, 25, 40, 50%, some even 60, 70%. Speaks to the extreme overvaluation of some of these hype stocks, growth stocks, high multiple stocks. Some people called it. Some investors were trying to explain it away by saying that value investors didn't understand the market or think high PEs are normal if companies don't produce profits because, the future profits look so good that they'll make up for the valuations over time. Well, that's just not the way the market works, guys. Eventually, stocks always return to their intrinsic value, what they're really worth, what the actual company behind the stock is. And that's what you really need to remember. There is a company behind these tickers, behind the stock name and the name of the company. There's actual products being sold. There's actual profits being made. There's debt being created. And if you're a dividend investor like I am, you really want to understand the free cash flow and the health of the company. Now, what are their sales looking like? What is their debt to equity ratio? What are they doing with the capital that they're reinvesting in the company? Do they have a good return on equity that they are investing? Do they have enough free cash flow to cover the dividend? And what is their payout ratios? Are they 60, 70%? So they're pretty safe, some even lower than that, 30, 40%. Or are they extremely high where a company is paying out more than what they can really afford to pay and they're utilizing debt to do so? That's what some people refer to as zombie companies. And again, some people I know have tried to, Kathy Wood, for example, say that people didn't understand innovation. Well, guys, companies have been trying to innovate for years. That is not some new idea. Every company on the face of the planet is always looking to do something innovative or use new technology to be innovative. So the idea that that was something that all of a sudden magically companies were trying to do is the same type of excuses you had before the dot-com bubble and during the dot-com bubble, right? During any bubble, you can always rationalize why something is overvalued, especially if you are investing in it and you are the one who's bought into that overvaluation. But if you understand, again, how to look at a business and value it correctly, there are some really good tools out there as well. I don't offer anything like that on this channel. Again, I always want to keep this channel free. It's just going to cover my investments, my portfolio, what I'm investing in, maybe a little bit of information and education along the way, books I'm reading that I would recommend for you to read, information like that. But if you're interested in tools like that, there are some out there. Fast Graphs is one that I watch that gives a good presentation if you were interested in buying a tool that kind of gave you valuations. There's another one out there. Let me think for a minute. A channel called Everything Money has one that they use to analyze stocks. That would be a good one. Now these are purchase. Obviously, you'd have to purchase the product from them, but those are two that I watch that have a similar philosophy to mine. Look for value where you can find it, when you can find it, and then jump in and invest where you can. Now they do cover some non-dividend growth stocks as well as dividend growth stocks, so I tend to gravitate more towards their information on dividend stocks, but those are some good ones if you're looking for a tool to value stocks rather than try to learn how to do it on your own. There are some good videos on that. Maybe I'll put one together sometime. Again, guys, I do have a day job and 2 kids, so my time is not readily available whenever I can. But let's get into, without wasting any more time, let's get into the stocks I purchased this week. Again, my recommendation is the dollar cost average over time. You can't time the market, but you can watch for your portfolio pullbacks, and those are the times when I would try to add to positions as they pulled back. So on February 2nd, we started investing for the month. We put $1,224.45 to work in the portfolio. With those funds, and these are always in reverse order, so I actually picked up, here, let me go here, 3M Company first, ticker MMM. I picked up 2 shares. This is one that's been pulling back here recently in the last few months, so I continue to add it. I think it's below the 166.23 per share value that I picked it up at, and I'll continue to add. I just believe 3M is a great company. They do have some headwinds. They were recently awarded some money in a lawsuit that they were involved in around some earring plugs for the Army. So you may want to look at that. And this is, in my opinion, a perfect opportunity with bad press to pick up a great company at fair to below market value. So again, 2 shares of 3M Company, ticker MMM at 166.23. I also highlighted Huntington Ingalls Industry as a company I was watching for this month. I picked up 2 shares of Huntington Ingalls Industry, ticker HII, and I'm sorry, 3M is in the industrial sector. So is Huntington Ingalls Industry. This is a defense contractor. And again, one that I think is a great company that's starting to pull back a little bit. So I picked up 2 shares at 183.47 per share. Another one I've been adding to relatively recently and over the last few months as well is Intel Corporation, ticker INTC. I picked up 8 shares at $48.58. I believe anything for Intel under 50 is a buy. Even 52 or lower, I would be interested. My average cost per share is starting to creep down under that $50 amount. So long as I can keep it around 50, I'd be willing to buy it above. And that's what's important about watching your dollar cost per share. You can buy shares that are kind of overpriced over time if your average is low enough where it still remains under fair value. I picked up some more shares of Huntington Bank shares, ticker HBAN. And Intel, I'm sorry, is in the information technology sector. Huntington Bank shares is in the financial sector. Picked up 8 shares, ticker HBAN, for $15.48. Another one I feel is very undervalued in the financial sector. It's a regional bank here in Michigan, Ohio. I know it's in those 2 places because I worked in Ohio this past summer and saw it there, and I live in Michigan and see it popping up all over here. So another one, nice dividend yield as well. And we had a little bit left over, so we picked up 1 more share of Lumen Technologies. This is another one that was on my stocks to watch this month for February. So if you haven't seen that video, go ahead and check it out. I picked up 1 share at $12.59. I do have over 100 shares of Lumen Technologies currently, so this is not one I'm looking to add, but at, under my cost basis, it's willing to throw a few more shares in it here and there. Next up, on February 4th, we went back in and picked up 10 more shares of Huntington Bank Corp, ticker HBAN, at $15.69. Omega Healthcare Investors, which is a REIT, dropped back into buy area, $27.42 per share. So I picked up 10 more shares there. This is a very high yielding REIT right here. I think they're north of 7, maybe even 8% dividend yield. So if you're looking for something that to increase your dividend yield, this may be a REIT you want to look at. And we put $431.08 buying those 20 shares of Huntington Bank shares, 10 shares, and Omega Healthcare, 10 shares. So guys, that's it for this video. That was that's it for the additions to the portfolio for this week. And we'll do a quick run through of the overall portfolio. The current value is sitting at $80,088.34. That is down a little bit on the week. Not as concerned with the total value of the portfolio as I am the annual dividends, but dividend yield is at 4.416%, so pretty nice yield overall for a $80,000 portfolio. And the annual dividend income, this is what it's all about. This is what that passive income that we're trying to create out of the portfolio, $3,536.61, and this continues to grow. I think it's up about $36 from the last video. Quick run through for the sector weights. Communications at 9.8%, consumer discretionary at 2.4%, consumer staples 11.83%, energy at 11.97%, with gas and oil prices up around $90 to $100 a barrel. This is the energy, and even the utility sector. If they're running oil and gas utilities, you might take a look at those. Those are good opportunities to ride the wave of this inflation. So is the consumer staples. People are going to buy consumer staples. That's why they call them staples. It's food. It's stuff that you use. Procter and Gamble, General Mills, Kraft Heinz, those type of companies that people are going to buy food brands or toilet paper and dish soap and stuff like that. You have to have it. Next up is financials at 9.18%. You got healthcare at 12.48%. This is one with the aging population. The baby boomers getting ready to retire is another one that I don't mind going a little heavier in. I don't think the baby boomer generation is getting any younger. We're going to have more people needing healthcare, and healthcare related costs are going to continue to go up because of that. So it's one, again, you can kind of ride that wave when you can find value. Industrials at 11.04%, technology at 8.46%. Materials is at 6.53%, and we really haven't added a lot to the materials sector, but it has crept up over the last several weeks. We picked up some mining stocks here at the end of last year, Vail, for example, Sabine Stillwater, and they have really shot up 20-30% in some cases for returns. So this piece of the pie has increased in value even with us not adding to the position just because we picked up the shares so cheap. Utility sector is at 6.40%, and REITs and real estate is at 10.64%. Now, recently I've seen a lot of REITs and real estate pull back. Store is another one I'm watching. O Realty, if it pulls back, I'd add to that position. Good is a monthly paying rent REIT. That's Gladstone, GOOD ticker. O for Realty Income. All and stores, STOR. All REITs that I'm watching for pullbacks, and we'll be adding if they do. And guys, that is it for this video. I hope you enjoyed the video. Let me know what you picked up the first week of February. Let me know what you think about these markets. Up one day, down the next. A lot of big hitters like Facebook hit 25% drops. PayPal, some other ones. Robolox, I think, is another one down significantly, 30-40% in some cases, some of these stocks. Let me know what you guys are picking up, where you see value. Are you sitting on the sidelines waiting for it to go down more? Again, in my opinion, dollar cost averaging into good companies at fair value or below value is the way to go. So hopefully you're taking advantage of these pullbacks as they happen. Don't forget to subscribe to the channel if you like this content. Like, share with anyone you think might enjoy the content, and drop a comment and let me know what you guys are doing in your portfolios. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time. And I need to get out there on that ice and do some ice fishing. Let me know if you guys do any ice fishing or anything like that. All right, we'll talk to you guys. We'll see you in the next one. Take care. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.